Let's call it look out below, a retail warning from Macy's. Macy's reporting its worst sales since the financial crisis yesterday. The stock fell 15%, and it took the whole retail sector down with it. Pain expected to continue today. We get earnings reports from Kohl's, Dillard's, Nordstrom. Could this be a sign, a bigger sign, of a slowing economy? Let's bring in John Hilsenrath, Chief Economics Correspondent at the Wall Street Journal. That was a shock, John. Do you think this is a broader problem? Consumer spending's been decelerating, I think, for 3 quarters in a row. Is this a Macy's issue or an economic issue?
Well, I think it's actually a technology issue. I think the fact is the whole retail sector is being dislocated by the fact that people are shopping more online. So it's really hard to read into overall consumer behavior right now just by looking at retailers, particularly clothing retailers. You know, our last auto sales numbers were pretty good. So I'm not ready to write off consumers. There's a lot of reasons why consumers ought to be at least hanging in there, if not doing better right now.
Mike Block had a note out this morning saying that consensus is for this is retail sales coming out tomorrow, Mike Murphy, for an 0.8% increase. Do you think that's too high?
I don't, but it depends on what you're looking at, what you're focusing on there. I agree with John that the consumer is good. I think the consumer is fine. I mean, you look, Macy's had a terrible quarter. They're down at 4 or 5 year lows. Gap, same story there. Amazon's at an all-time high, so people are spending money. This is a technology story. This is a startup, Silicon Valley, if you will, story where people are changing the way they shop, and these companies with the big bricks and mortar, like Macy's, are in trouble because they have a lot of staff to pay, they have a lot of real estate to carry, and people are now going at home and they're ordering or buying whatever they want to buy from their couch, from their computer, from their mobile device, and the big retailers need to change quickly or they're going to be left in the dust.
Hey, you know, Dagan, what I'm going to be looking at in those retail sales numbers is how eating establishments are doing, because that's not something that you could just turn over to the internet. And you know, when I walk around malls today, the parts of the malls that they're really building up are the eating section. So if we see people going out and dining outside of the home, that's a sign that they're not in such bad shape.
I imagine you cruise in the mall, John, actually.
I've got teenagers.
Sporting goods, some running shoes. John, I do want to move on to another issue. It's been a bad year for mergers and acquisitions. The Wall Street Journal reporting a record $395 billion in deals that have fallen apart just so far this year. Is the government to blame? A lot of it does seem to be that way, whether it's Staples, Office Depot, you look at Pfizer buying Allergan, but is there something else going on here?
Well, no, I think the government is a really important part of this story, and this is the way the White House is talking about it. I mean, we know that this economy is less dynamic. We're seeing fewer startup firms. We're seeing less hiring by small firms. And their argument is that there's too many big companies that are dominating the marketplace, so they've been very aggressive. The Federal Trade Commission has been very aggressive at pushing back against these mergers that make firms even bigger and give them more market power. Now, I'm not arguing that that's actually what's holding the economy back, but that's why the White House, why the Justice Department is getting so involved in these cases.
John, good to see you as always. John Hilsenrath, come back soon and get yourself to New York City, please, so we can see you in person. Thanks, John.